let's move over to York and talk about the freehold market and what we're seeing here. And Matt, we got to update some of our color codes, but we see our month over month in the freehold market for York is down 5% month over month, and this is pretty common. I wouldn't be worried about this um, too much in the summer months because it's kind of what I expect. It's honestly
Yep.
it's what I expect to see. July and August, you typically see your average price dip just like you do in December and January in comparison to the rest of the comparison to the rest of the year. Down 2.7% in terms of units. It just goes to show buyers are finding value in different places because we did surpass some of our sales targets otherwise as the whole of the Toronto board, but York Freehold's still struggling there just a little bit. Median days on market are up, moving from 20 to 23. Termination volume is down 2.4%. That's great to see. We've seen typically, Matt, I think the highest we've seen in that is like a 40% termination volume
Yeah.
in comparison, right? So that's nice to see. Year over year, pricing is down 7.5%. This, Matt, I think this is actually a little bit less than what we saw last month because some of the York numbers, specifically in Aurora, were hovering closer to 10 and 11% last month. So not terrible there. We know we're down year over year. I don't know if there's anything else that stands out for me as we look at this freehold market right now.
No, I mean, yeah,
Yeah, I think we're good. But looking at the listing volume has been kind of the same all year. I remember whenever a market got bad, they're like, "There's just so many more homes available for sale." It's like, well, no, we're looking at this. We are a little bit higher than what you typically see for new listings, but I think that's mostly because our termination volume has been so high over the last few months. But I'd say we're still kind of right there in the mix for what you would normally expect. A little bit higher for the month of July, I think, because of the lag. But what the challenge is, it's because these active listings are so high. Again,
yep,
setting a record here, beating out our 2018 volumes. Matt, you alluded to this when you were looking at the interest rates and talking about how slow 2019 was. Well, here we are looking at York Freeholds in 2018. We're seeing just a ton of active listings, and we've surpassed that. And then here's the story with the sales volume: is we've just really underperformed all the way back to 2011. We're now surpassing the last few years for the month of July, which is great. I think that's because we're slowly starting to get our push from the springtime having, disappeared.
yep,
When we take a look at median price, we've talked about this. Yes, we have now rolled under the 2021 pricing. So we're still handsomely above 2020. But yeah, that's 5 years of sales that essentially that equity growth has been kind of wiped out for the most part when we take a look at median price.
yep,
Yeah. And I
yep.
mean, we saw this coming because 2021 did uptick really, really quite aggressively in the second half of the year. So we knew it was coming. I didn't think this median price month over month was going to be quite the dip that it was. I kind of thought we'd end up here around 2022. But yeah, nonetheless, coming in under in terms of our median price. And when we come back here, here's a big reason for it. Our months of inventory is quite high right now. We're at 5.88, which has been continuing to trend upward. We were hoping for a rollover at some point, but just hasn't quite come for us in that freehold market yet, Matt.
No, and we were wondering, would we peak out over the 2018 pileup of inventory that we saw there?
Yeah.
Because we've been doing this since last summer, and it's carried itself above that now, and I think come by the end of this month and into September, we should be sitting probably a little bit higher than that.
Yeah. And it's interesting because it's almost 1,000 units we've added since last year. Because in 2024 we were sitting at 3,000 units. Matt, these numbers are quite startling when you look at them in comparison to where we've been in the past. Because you look at 2022's numbers, and you're at 1,900.
Yeah,
2021 you're at 1,200 active listings, and
yeah,
we're currently sitting at 4,000. This is all for the month of July. So this is comparing apples to apples in terms of seasonality.
Yeah.
And what we're seeing is just a tremendous buildup in terms of active listings and available inventory.
Yeah. And at the end of the day, you can't get any price acceleration to the upside that's anything significant when you've got this amount of property sitting on the market. Because
Yeah.
unfortunately, there will be some of those people in those communities that have to just move off that property as fast as they can. And that can help to drive, the comps for that area to the
Yeah.
lower bound.
Yeah. A very real scenario there is you've got two homes listed on a street, both comparable and probably competitive with the recent comps that sold in the previous months. One of those sellers has to sell in time to be able to close on their next property. They drop their price quite aggressively to make up to get the buyer to see tremendous value there and come and act quickly. Well, now all buyers are going to be looking at that, whatever that price is for what they expect to pay for the next house. And all it takes is your neighbor to make one of those decisions, and now they've made the market for you. That's why when your realtor's telling you you don't want to be complacent in this market, you can't sit back and wait too long, because it's not that we don't have the patience to wait for a good sale or the right buyer to come along. It's like we're concerned about your neighbor doing something drastic and then they take the bottom out from under you, because when we look back here at active listings, we know there's so much choice there for a buyer. It's not an easy turnaround if one of your neighbors makes that decision.
Yep.
So when we say that, we're coming from a place of care. I want you to know that.
Yep.
All right, when we take a look here, Matt, at the percentage of homes that are selling above the asking price, there was quite the uptick at the beginning of the year, sitting at 35%, above the ask price there. And now we've tapered off. We're hovering there around 25%. Um,
Yeah, I'm not. I think a lot of people were trying to price the homes low to get people off the sidelines to come and put offers on properties, because it really seemed like for a good while there, like nothing was budging buyers to get in there to give an offer. Um, so I noticed that there was a quite the uptick in holding offers just to try and get people off the sidelines.
yeah.
That's clearly fizzled out in the market that we've been in the last couple months for sure.
Yeah, definitely. There was, and I think there's always the right homes, like the most desirable in the right neighborhoods that will command that type of attention, and the strategy will work. And you're right. In a market where there isn't urgency, you do what you can to create some urgency. So I do think that we saw more of that at the beginning of the year, and then as we continued to see the sluggishness of the sales, it kind of disappeared. We're seeing a bulk of the sales volume still happening in that million to 1.25 range. Second place being 125 to 1.5. That's where the bulk of all of these sales are happening. And Matt, as we've talked about active listings by price range and where a ton of inventory is sitting, is in that $2 million plus price range. Second part coming in there at the 125 to 1.5 range.
Yeah, I mean there was 92 sales there, so that's a good sign. Typically, it's a lot less than that. Um, so I think we did have a little bit of an influx in the amount of sales on the 2 million plus.
Yeah. And it's interesting to see that, 76% of the homes that are out there available for sale are detached houses
Hmm.
when we're looking in the freehold market. You're 18% there for your towns, 6% for your semis. When we come over to the sales side of things, we're looking at 53% of the sales are detached. So it's not proportionate in terms of like the inventory that's sitting. And the reason for that is, the higher prices definitely in the detached market in comparison to when you're looking at the towns or the semis.
Yeah, I don't know why, but for some reason, if you look at that chart, the 2 million plus last month was 1,063,
Yep.
and this one's only showing 404. So I don't know if there was an error on our side with that, or if that many higher end properties came off the
Left the
market. So
market.
I'll have to double check that.
Yeah. Let's take a look. Let's take a look for sure.